Hi, this is Jack Crooks from Money and Markets TV. It's no secret that the Eurozone is in deep trouble. It's becoming more and more likely that Greece will exit the single currency experiment. And if it does, it's estimated that European banks could be on the hook for $6.3 trillion. That's way beyond what the firewalls set up by the Eurozone leaders are equipped to handle. This danger is forcing banks to deleverage, reducing their loan books in order to bring money back home and bolster their balance sheets. And that trend is weighing on Eastern and Central European countries more heavily than the rest of the continent. That's because their capital markets are not yet viable, so they have very little in terms of domestic sources of funding. They rely most heavily on direct cross-border bank financing from the core Eurozone countries. So when credit dries up, these European emerging markets begin to suffocate. But wait, it gets worse. Much of the direct lending in these countries comes from banks in Switzerland and Sweden, whose currencies are not tied to the euro. But the currencies in Eastern and Central European countries, such as Poland, Hungary, and Czech Republic, tend to move in direct correlation with the euro. So if the euro falls, their currencies will fall too, and much faster. Therefore, loans that are denominated in other currencies outside the euro, the US dollar, the Swedish krona, the Danish krone, and Swiss franc among them, will get even harder to pay at exactly the time when credit is drying up. It's a painful double whammy that could spread like wildfire across the emerging European markets. I want to highlight the currencies of these three countries. I mentioned earlier the Polish zloty, the Hungarian forint, and Czech koruna in relation to the US dollar. You can see that they're already feeling the pain, falling steeply over the past month or so. But I believe the damage could be catastrophic in the event of a European banking crisis. All the emerging countries that are so dependent on cross-border capital flow are almost guaranteed to get crushed. As bad as things could get for the euro, the currencies of Eastern and Central European countries are likely to get hit much harder. I'm Jack Crooks from Money Markets TV. Thanks for watching.